Ethan Cole was a modern-day trader, living in the fast lane of digital investments. With every rise and fall of the stock market, his pulse raced. Each notification on his phone brought a rush of adrenaline, lighting something primal within him. Yet, today was different. The morning began with a blaring email. Market volatility increasing, invest wisely. Ethan scoffed. He had seen worse days. With a few clicks, he hastily moved his entire portfolio into a high-risk tech stock, convinced he was ahead of the game. The screen lit up with green numbers, feeding his overconfidence, until it didn't. By midday, the stock tanked. Panic gripped him as he watched his wealth evaporate into thin air. He sat at his dimly lit desk, his thoughts spiraling. The sound of ringing phones faded. All he could hear was the thumping of his heart, the blood rushing through his ears. Memories of past successes flashed before him. The lavish dinners, the envy of friends, but all faded under the weight of loss. He felt dangerously close to tilting, emotionally and financially. Gritting his teeth, he recalled the advice he had always ignored. Have a plan. He pored over charts and re-strategized with an increasingly frantic pace, driven by desperation instead of reason. The stakes grew higher. Each desperate click led to deeper losses, while a voice in his head warned him to stop. One last trade, he whispered. Then, nothing. The screen went black. Gone were the graphs, the numbers, and the promise of wealth. In that silent void, Ethan was left alone, burdened not just by the loss of money, but by the painful realization, in the rush for success, he had lost himself. Overconfidence and going on tilt is a common mistake that can have devastating consequences for our trading accounts. It's a trap that we can all fall into, but one that we must avoid at all costs. Remember, emotional control is key to successful trading, and it's essential that we develop strategies to manage our emotions and stay focused on our goals.